We believe emerging markets are going to embrace Bitcoin, get away from many of them have corrupt regimes, and they don't trust their monetary authorities. They don't trust their politicians generally. And so we think emerging markets are a huge use case here.
Do you think that Tesla is this one outlier that will defy all the previous numbers we have on US companies in terms of the growth opportunities? Is it that big?
We do believe it is that big. So if you look at the revenue growth the last 5 years, it's compounded at roughly 48% per year. And that was, as you recall, when Tesla was experiencing quite a bit of controversy. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or our bear case. And there are a few reasons. There are 4 barriers to entry that seem to have gotten higher in Tesla's favor. The first is battery technology. So Tesla is the only car manufacturer, with the exception of just a couple in China, the only car manufacturer that decided to ride down the cost curve of the consumer electronics industry using batteries that we find in our laptops, our cell phones. And when Tesla decided to do that, auto manufacturers actually laughed at it, as did auto analysts, because there were advertised or publicized battery blowups on airplanes. And so there was a banning of that kind of battery. So because of that, its costs are so much lower today. The cost of its battery or its battery pack system is so much lower than other auto manufacturers that if they really want to compete with Tesla, they're going to have to lose money in electric vehicles while their gas-powered vehicle sales are falling. The alternative will be less power or less range. So we're seeing a lot of permutations around that. So battery, still 3 to 4 years ahead in terms of cost declines of other auto manufacturers who decided to use lithium-ion pouch technology as opposed to the cylindrical batteries that Tesla uses. The second barrier to entry, and this I think is the critical one from a valuation and a growth point of view. Tesla is the only auto manufacturer to have designed its own chip. Tesla is taking a leaf from Apple's book. If you remember in the day, Apple was the upstart. Nokia, Motorola, and Ericsson were the winners in the cell phone space. Apple was this upstart that had the point of view, Steve Jobs, that this was not just a phone, it was going to become a computer in our pockets. And he was right. And I'll never forget the delight I felt when I was able to access the internet on my phone. I just thought this was revolutionary. The others didn't follow. They didn't have their own chip. They didn't have the vision. And today, even today, when Apple's market share has gone down to 12%, it takes most of the profits out of the global smartphone market. And then the other 2 barriers to entry. So the artificial intelligence chip, why is that important? This is all about autonomous travel. And it's the only one doing this. And we believe that the other barrier to entry they have is the billions upon billions upon billions of miles of real world driving data that Tesla has accumulated, so that with its AI expertise, Andrej Karpathy is the expert in autonomous transportation. They now have more corner cases to train their systems on than any other company. It's not going to be possible for these companies to catch up because Tesla already has more than a million robots, including my Model 3, roaming around, collecting data and sending it back every day. And then the other barrier to entry, which I'm surprised this one still exists, is over-the-air software updates. I got my Model 3 in 2018, and I've never had to take it in for a problem. Tesla apparently has diagnosed any problems I've had and corrected them before I see them or experience them. The only problem I've had is a nail in a tire. And of course, software could not correct that. But that was it. And so those 4 barriers to entry have given Tesla the lead. Our base case is $3,000 in 5 years, from $800 today. And our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps BYD in China, no one else is doing this yet. And Tesla had to go through a huge learning curve to get there. This is not like the manufacturing of traditional autos. It's a completely different game. And so we believe that Tesla's market share, we used to say we thought Tesla would take 25% of the electric vehicle market in 5 years. Now we're saying we believe Tesla will take 25% of the total vehicle market in 5 years. And we think electric will be nearly half of total vehicles sold.
Cathie, talking about targets, I know I'm almost embarrassed to ask this question, but you also, of course, I need to ask you about Bitcoin. I think everyone under the age of 40, which unfortunately I'm not, but anyone under the age of 40 will come after me if I don't ask you if you still are that bullish, and I'll let you define yourself how bullish you are on it. And maybe for me, the old boy here, to talk a little about the network effect that you think, I presume it's driving this effect.
Sure. We gained our first exposure to Bitcoin in 2015 when it was a $6 billion network. Today, it's about $1 trillion network in a $2 trillion new asset class. And that what I just said is very important, new asset class, because institutions have to look at Bitcoin. The correlation of returns here is very, very low relative to any other asset base. The highest correlation between Bitcoin and other assets is real estate, and that's a 0.3. That's the highest. If you look at most others, very low correlations. This is what institutional investors are seeking. We had a bit of a pullback this year after Elon Musk put Bitcoin on Tesla's balance sheet, Square as well, MicroStrategy as well. And the pullback was all about environmental. Is Bitcoin going to, is it consuming too much energy? Is it going to create too many bad environmental impacts? And so we had the setback from 64,000 to about 30,000. Now we're closing in on 60,000 again. And I think partly because of our work with Square, we held a conference called The B Word, and it was all about the misconceptions around Bitcoin in particular. And environmental is one of them. I remember the same argument being made about the internet in the 90s and early 2000s, that the consumption of electricity was outrageous. It was that of a major country. I forget which one they were using at the time. And of course, we can see how the internet has transformed our lives and increased access to the emerging markets through this little thing called the mobile phone, the computer, and transform lives in such a good way. You can say there are side effects there, but I think everyone agrees that the internet has been a good thing. Bitcoin is the first private global rules-based monetary system that the world has ever known. And we believe that El Salvador, what's happening in El Salvador is unbelievable. Today, because the president decided that El Salvador was going to step out and innovate, the president there has given every one of his citizens $30 worth of Bitcoin in a Chivo wallet. Now, if you look at that country, only 1.2 million out of 4 million adults have banking accounts. Already today, roughly 3 million have downloaded the Chivo wallet and are using it not just to get access to that $30, but to do peer-to-peer exchange. So when you talk about the network effect, we think remittances will be one of the most important, and I believe we have numbers on that remittances account for a disproportionate amount of the activity. We believe emerging markets are going to embrace Bitcoin, get away from many of them have corrupt regimes, and they don't trust their monetary authorities. They don't trust their politicians generally. And so we think emerging markets are a huge use case here. And we believe that use case alone, if we take away the 4 major money supplies that probably aren't going to change that much, that use case alone will add, I believe the number is 200,000. If it were adopted fully throughout the emerging markets ex-China, that would account for $100,000 to $200,000. And forgive me, I don't know which one it is. I do know if institutions were to allocate 5% of their portfolios globally, ex-China, that use case alone would be $500,000 in addition to the $60,000 in Bitcoin's price. This is much like what happened with pension funds when it came to real estate in the 70s. It came to emerging markets in the 80s and 90s into the 2000s. We think this is the next iteration. This is the diversification into a completely new asset class, the first truly new asset class since the 1600s when equities launched.